Hey everyone, and welcome back to the channel. It's earnings season, and things are, well, they're a little wild out there, right? We're seeing some companies with fantastic results that aren't getting the love from the market, while others with less impressive numbers are soaring. It can be tough to make sense of it all. That's exactly what we're going to dive into today. We're going to cut through the noise, ignore the hype, and really look at some stocks that might be offering some compelling opportunities right now, especially when you consider where they've traded historically. We'll also take a peek at what Wall Street is saying, but remember, we always want to do our own digging. Now, if you're new here and you like getting straight to the point, real analysis without all the fluff, then make sure you hit that like button. And if you want to stay updated on these kinds of market insights and analysis, please consider subscribing to the channel so you don't miss out on future videos. We're building a great community here focused on smart investing. To help us make sense of the current landscape, let's take a look at a recent discussion on Market on Close. They were talking about Alphabet's earnings beat and looking ahead to other tech results. Let's hear what Robert Schein, Chief Investment Officer at Blanky Schein Wealth Management, had to say about Alphabet's performance. Interesting points there, right? The initial reaction to Alphabet seemed to be one of relief, especially given some of the narratives out there. But as the host and Robert pointed out, the search ad revenue growth was significant. And it really makes you think about some of the doomsday scenarios that were being painted. Now, I want to dig a little deeper into this idea of market overreactions and potential opportunities. We're in a period where there's a lot of uncertainty, macroeconomic factors, geopolitical events, and of course, the ongoing developments in areas like AI. All of this contributes to volatility and sometimes, what appear to be disconnects between a company's fundamental performance and its stock price. Think about it. A company can deliver strong earnings, show solid growth in key areas like cloud computing or advertising, and even announce shareholder-friendly initiatives like buybacks or dividend increases. Yet, the stock might not react dramatically, or even decline. This can be due to broader market sentiment, concerns about future guidance, or simply the market having already priced in those positive results. Conversely, we see situations where companies with less stellar earnings might see their stock jump significantly. This could be due to short covering, overly negative prior expectations, or hype around a particular narrative. The discussion then moved on to the broader tech landscape, the importance of guidance, and the massive investments being made in AI. Let's hear more of that conversation. Play the segment of the original video and then from a valuation standpoint, yeah, we have seen the PE come down even on the S&P 500 to 19 inches up to. So, thanks for watching, and the point about Amazon's valuation being at levels not seen since 2009 is really striking. Think about the difference in the company then versus now. The growth they've experienced, the diversification of their business into cloud computing and advertising, it's a completely different landscape. And yet, based on some metrics, the valuation is more attractive today. This highlights the importance of context and not just looking at headline numbers. You need to understand the underlying business, its growth drivers, its competitive position, and its long-term potential. The conversation also touched on the AI race and the significant investments being made by the major tech players. While there's a lot of focus on who will win in AI, the reality is, as the speaker mentioned, there will likely be multiple winners and many different ways to monetize this technology. It's not a zero-sum game. This means that even if one company's AI initiatives don't immediately translate into massive revenue, their other strong business segments and healthy balance sheets can provide a solid foundation. So, what's the key takeaway here? In times of market noise and volatility, it's crucial to focus on the fundamentals. Don't get caught up in the day-to-day price swings or the latest headlines. Instead, dig into the earnings reports, understand the businesses you're invested in, and assess their valuations based on their long-term potential. As we saw in the discussion, sometimes the market presents opportunities when strong companies with solid growth prospects trade at attractive valuations. It's our job as investors to identify those situations and act accordingly, keeping our long-term goals in mind. If you want to learn more about how to analyze company valuations, understand earnings reports, and navigate these kinds of market conditions, I encourage you to check out the resources mentioned in the original video. Building your knowledge and developing a sound investment strategy is the best way to achieve your financial goals. And again, if you found this analysis helpful and want to see more content like this, please hit that subscribe button and join our growing community. We're all about learning and growing together. Thanks for watching today, and I'll see you in the next video.